Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld in the house, counting you down to the closing bell. Here to take us beyond that bell. It's our global simulcast, of course. Carol, Massar, Tim Stenovec, as we go cross-platform TV, radio, YouTube to discuss what is, well, a pullback in sentiment somewhat, a pullback in risk on a trade, and certainly a little bit of profit taking, Carol.
Yeah, it really is. You certainly feel the tone a little bit different than what we've been seeing certainly yesterday. And I think about what Tim said earlier in terms of those bank stocks, those financials really taking it on the chin. Really your worst performer here. If I look at the S&P major industry groups, down about 1.7%, Tim.
Carol and I just had a great chat with Doug Ramsey, the CIO at the Luthold Group, who's really defensive right now and said, essentially, you know, if you're still fully in the market right now, it's not too late to pull back because he thinks that the lows that we saw last week could be undercut.
Interesting. I guess that's what makes markets. I think we heard maybe a little bit of a different tone coming from Emily Rowland of John Hancock, saying that still the fundamentals look good, particularly when you're looking at credit, and certainly liking some of those investment grade names, as well as sort of hinting, Katie, that inversion of a yield curve, if we get it, doesn't immediately say panic.
Yeah, I mean, there's two sides to every trade. We're definitely seeing that now, but I think that's a great point on the yield curve that actually the 12 months after inversion, they tend to be kind of okay for equities. And of course, you have to consider the magnitude of any inversion. Of course, we're talking about this now with the 2s-10s curve about 20 basis points away from that negative territory.
I mean, well, wasn't I just being led to believe that it's a 3-month tenure that means you buy meme stocks? So there we have it. Who knew?
I did it. My job is done. I can go home now.
There's the technical buy factor. Meanwhile, we're looking at the S&P 500 not having a buy signal today. We're down by 55 points as those bells ring. We're off by 1.25% on the S&P 500, 4,455. We're down to a similar degree, 1.3% on the Dow Jones Industrial Average. We're off by 450 points, let's call it. NASDAQ off by 186 points, 1.32% to the downside. Russell 2000 was the underperformer. Those small caps getting beaten up today. Let's have a little pull out and see how the Russell 2000 fell by 1.7%. But context is due, as of course we have seen in the past week, a significant amount of buying in stocks, Taylor and Carol.
And all of us, right?
And all
There's
of
a lot
you.
going
All
on.
of you.
We're a family. Hey, let's, Caroline, you're breaking down those major equity averages, and we're pretty much on the S&P and Dow, NASDAQ, finishing at those lows of this session. S&P 500, just a little bit of a further breakdown. 413 names in the index lower today. So, as Caroline mentioned, definitely risk-off trade here on the equity side. Only 90 names. Taylor gaining some ground.
Yeah, and you certainly see that within the sector level too, Carol, right? Take a look at the sector winners and the sector losers. There's actually only 4 sectors within the S&Ps. We dive down about 2 notches lower that are still in the green. Of course, energy continues to be in that trade after another big day for crude markets. Energy's up about 1.8%. Technology and autos are still up there as well, but certainly not getting the big boost the likes of energy has. Everything else for our radio audience is actually pretty red, and it's pretty red on the screen. I take you down to what here has been the big underperformer on the day. It's a lot of the banks. Now, we've talked a lot about today being the yield story kind of day. And then it's tech, right? It's semiconductors, hardware equipment, and software and services. And that sort of, Carol, has been an interesting theme, is when yields have been falling, tech traditionally has been some of the big outperformer, but not today.
No, exactly. All right, so let's get to some of the day's gainers, and certainly kicking around a lot, quite a range here. Those Chinese stocks, I mentioned it earlier, we did see a bounce back, and they continue to see money pouring into it. One of the big gainers in the Chinese trade, those U.S.-listed Chinese ADRs, was PDD, up another 4%. But at its highs today, guys, it was up almost 17%, but finishing the day with a gain of about 4%. So it's been on quite a run here. Enphase Energy, Taylor talking about energy. We continue to see gyrations as that shift potentially will take some time from fossil fuel to others, but those in the solar space continue to get attention. Enphase Energy among them, at its highs up almost 5%, finishing the day still though with about a 0.5% gain. It's up for 7 days in a row, so it's been on quite a run. And a little known company named Apple, which was up 2.25% earlier in this session, still holding on to a gain of just under 1% here. A lot of analysts out talking about expectations of signs of robust iPhone 13 demand, so that certainly give a kick to Apple in today's trade.
Hey, speaking of Apple, we got a headline from Google about something that Apple is certainly keeping an eye on. Google is going to let app developers offer their own billing systems. The Google Play Store is beginning a test of outside billing with Spotify. This for years has been an issue for app developers. It's huge, who've complained about Apple and Google's Android system essentially being a gatekeeper and taking a toll when somebody uses in-app purchases or subscribes to something through the App Store of their respective platforms. Watching shares of Apple in after hours not moving much at this point, and we know that's an issue that app developers have complained about for years at this point.
30%
Spotify.
commission, what was it? Google cut it to 15%, but this is huge for the companies like Spotify. This is why you know that Epic Games has been taking Apple to court. There's frustration from app developers that they had to give so much of the cut for in-app purchases. I mean, I was interviewing a app developer just the other day. Fan House was all about really the frustration of Apple and how much of a chunk of change they take whenever a purchase is made via the Play Store or via your App Store.
And their argument, of course, Caroline, is that they're the ones who are providing access to this customer, right? And they're, of course, keeping the App Store safe for their customers. But yeah, important to watch Spotify and after hours higher by about 2% right now, and then we'll keep an eye on Apple as well. Hey, let's get to some of the decliners that we saw today. Speaking of tech, talking about Adobe, shares finished down by more than 9%, falling after the company gave an outlook that was seen as disappointing. The company actually referenced stopping sales in Russia and Belarus as part of the issue in its guidance. Shares falling 9.3%. We saw price target cuts at Credit Suisse, Deutsche Bank, Piper Sandler, Barclays, and more. Okta, the digital identity verification company, shares falling for a second day in a row over this hack, at least 2 downgrades due to the breach. The company did say earlier today, or late yesterday, I should say, that about 2.5% of its customers may have been affected. And then Cresco Labs, the marijuana company, finishing it down 7.5%. We interviewed the CEO of the company earlier today on Quick Take. I know you did as well on Bloomberg TV. Charlie Bachtel, who said that businesses are very complementary, and I'm talking about the acquisition to buy Columbia Care for about $2 billion in equity, create a multi-state operator in about 17 states. So a pretty big acquisition when it comes to the marijuana industry.
M&A that we've actually kind of seen on halt a little bit amid this geopolitical tension and market turmoil. Of course, geopolitical tension still very much affecting the commodity space. We go cross-asset for our audience, and I look at Brent crude up 5%, WTI up almost 5%, $114 is where we trade at the moment. As we see supply-side concerns once again, this is inventories pulled back in the United States. That data not looking so pretty. We have concerns about the Black Sea as well and some of the export terminals there. So overall, the supply side, a headache for oil that pushes it higher. Steel up more than 1.3%. We see zinc up, metals catching a bid. Interestingly, overall, we do continue to see this inflationary pressure coming from commodities that feeds into the FX market. Overall, Aussie dollar up 0.4%, a commodity-related currency. Norwegian krone up 0.8% as it feeds off the oil move. Notable British pound off by 0.4%. This is a buy the rumour, sell the fact kind of a day for the British pound, because this is inflation running hot once again. Gas prices, need I say more? The UK seeing a 30-year high in its inflation rate. And that's why, of course, we start to see the concerns about what Rishi Sunak, what some of the Treasury Department can do to alleviate the stress on the consumer, and what really it can do to alleviate any sort of risk of a recession in the UK. I look, therefore, at a mixed picture in the bond market. The United Kingdom, the gilt market catching a bid on the 30-year. But overall, we sell off in Japan, United States, well, Canada for once, actually seeing a real pullback in yields on the 30-year. And it's kind of a similar story in the US, Taylor.
It is as well, sort of price higher, yield lower as we're going into safety again today. And Carol, I'll keep it quick. I think just sort of what's notable is the last 2 to 3 days of yields higher. So that helps put into perspective some of the yield drop that we have today. You're back down to a 210 on the 2-year and a 229 on the 10-year. And this sort of brings up this theme of what the bond market's telling us about, is this sort of another big rally in the equity market that we get in the midst of broader bear markets? Or, as you were speaking to your earlier guest, more just sort of defensive moves that are underway?
Well, I'm going to say the 2-year anniversary, right, from the COVID drop in terms of markets. And it's really kind of amazing, Katie, the volatility, the moves that we've seen in the last 2 years, and yet we are still in a market environment where there are a lot of questions out there.
A lot of questions, big questions about the Federal Reserve in particular. I mean, the reason buy the dip worked over the past 2 years was you knew the Fed was there to backstop markets at pretty much any sign of turbulence. That's not the case now. So where we're headed over the next 2 years, I mean, it's a great question.
100%, roughly, the S&P 500 has increased since that day 2 years ago. The NASDAQ 100 about 108%.
We were at 2237 on the S&P 500, and we're at 4456. So a little perspective. All right, guys, a lot going on. We covered a lot of ground, and we're, of course, waiting for more ground to be covered as President Biden gets to Europe, and we'll be following all of those headlines as well. That's going to do it, though, for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place tomorrow.